sometimes it could be 18 months of not investing and then going so deep in a particular sector and then realizing, okay, I have this aha moment. This is the investment I'm going to make. I won't let FOMO influence my decision making.
Sure.
And for us, core to our thesis at Touring is our product market fit is we resonate with founders who are incredibly capital efficient. Some of the tenets that we look for is that adaptability that I mentioned, that resilience, but also this sort of intellectual curiosity and voracious need to learn and upskill and better yourself, and also the humility to know that you don't know everything and you want to surround yourself by experts. So that is actually quite fascinating because it's not that hard to decipher during the diligence process a founder who thinks they're a know-it-all or a founder who is consistently up-leveling themselves, surrounding themselves by other folks who honestly know more than them. So what do you diligence the VCs on? I always say go for off-book references versus just the on-book references. So you can talk to other founders to understand how the VC has added value, what they've done, what they've been like over time. But in particular, the question to ask is, what did they do when you've had 2 quarters of misses?
Sure.
What did they do when you maybe came close to running out of cash? What did they do during these pivotal company changing moments? As a VC, you are a board member, you can provide advice and whatnot. The advice is 10 times better when it comes from a founder who has been through exactly this issue in the past, or who's currently going through it and you're brainstorming directly with them, understanding what worked for them, what didn't work for them. That's why our founder network, I keep coming back to it, is so powerful because we connect our new founders with our founder LPs. We connect founders in our portfolio who are going through similar stage problems with one another as well. And so I think that network helps tremendously. We don't company build, right? We are not doing that. We are there to sort of ask the right questions to the founders to get them to unlock the vision that they actually have inherently within them.
Please buckle your seatbelts because the scale of flight is taking off now.
Welcome aboard the Scale-Up Flight. My name is Peeyush Upadhyay, managing partner at Pekamiar and also the podcast host. As you know, at Pekamiar, we help build leadership and revenue teams that convert capital to growth. Now, today is a super special day, and I'm absolutely stoked to have with me a very special guest. And let me explain why it is so special. The probability of finding a woman of color in venture capital, somebody who's at a general partner level, is 0.1%. Yes, you heard it right, 0.1%. To be sitting across with her is super special. We're talking about somebody who, by the time she turned 12, had traveled to and lived in 12 countries, made it to Forbes 30 under 30, was an investor at Microsoft M12, Mayfield, SoftBank Vision Fund, and then has now gone on to found her own fund as the co-founder and general partner of Touring Capital, which is a $330 million early growth fund. It's such a privilege and a pleasure to have with me here Priya Saiprasad. Priya, how are you doing? Welcome.
Good. Thank you so much for having me. I'm super excited for this.
No, absolutely. And it is such a pleasure, like I said. So Priya, what is with these horrible numbers, 0.1% women of color in venture capital? Like, what needs to change? How can we fix it? I know that you've done a ton of work in this space.
Yeah. No, it's, without sugarcoating it, it's not great, right? And what this does actually is the women in positions of power and decision-making at venture capital firms typically tend to drive diversity in the founders that they back as well, and adding on pockets of diversity into the portfolio. And so you have to fix one in order to fix the other. And so it's absolutely imperative for the entire ecosystem. And as you know, venture is a game of finding alpha and
Right.
for finding the dime in a dozen that ends up power law returning your entire fund. And so alpha inherently isn't obvious upfront. If it was obvious, everybody would invest in the same companies. And so you actually have to find different people with different backgrounds, with different pockets. And so there's a ton of benefits that show that you have to look outside of the beaten path, outside of your regular networks that everyone has access to in the industry. And so with that said, I will say there's a couple of things that are causing sort of this systemic systemic decrease, I would say, in women in positions of power in VC firms. And if you think about venture capital as an industry, it's not a very old industry. It's existed for 50, 60 years now. And when it was started by, a predominantly male and predominantly Caucasian male demographic, right? And then the whole idea of venture capital is that you generate returns for your LPs. So you take $100 and you make ideally that $100 into $500,000, right? And your LPs are usually happy by it. So the initial wave of venture capital and that demographic of folks typically invested in the founders that they were exposed to in their networks. They generated fantastic returns for their LPs, and their LPs continued doubling down and tripling down in Fund 2, Fund 3, Fund 4, Fives, et cetera. And so the GPs almost didn't feel the need to look outside of what's generated success for them in the past, because success is measured by, can you turn $1 into $10, right? And so what if success was measured by, sure, can you turn $1 into $10, but your LPs held you accountable to finding success in different pools and finding success outside of what has worked for you in the past. And we as GPs are stewards of capital for our limited partners. We will definitely do what it takes to make sure that our limited partners are happy with us and make sure that they continue investing with us in the future, right? So if we reframe what the expectations are from LPs to GPs and add in a layer of diversity there, I think, and diversity, as we know, leads to better results.
True.
So that, I think, will fundamentally change the paradigm. And we have lots of different groups that are actively working towards this and actively working towards systemic change, but change, unfortunately, takes time.
Takes a while. Yeah. And to give credit to you, you've been instrumental in affecting that change. You did that while you were an investor at M12, and correct me if I'm wrong, but you guys partnered with Mayfield and Melinda Gates Association.
That's correct. Yes.
Invited about 1,000 odd, applications from women founders.
Yeah.
How did that go? I mean, did that eventually translate into some fundraising for these female founders?
Yeah, no, it's a good question. I'll give you a little bit of backstory of how that came about. We were consistently in our investment committee meetings at M12, looking at a bunch of different deals all the time. And I think someone at some point posed the question of, why do we not have enough female founders in the portfolio, right? And the answer was pretty visceral from everyone. Well, we invest in enterprise software. We don't really do consumer and marketplace technologies. And so there tends to be more female founders in the sectors that we're not investing. That's the only reason why. And so a few of us across the table decided to investigate further. It's an easy way to dismiss why, right? And so we decided, what if we did a call to action and tried to go out there and just, first of all, identify how many female founders are who are solving large-scale enterprise problems and building startups, right? What if we launched something like a female founders competition for just female founders who are building for the enterprise? And we did a call to action out there, and we started first, we did this across multiple years, and the first year was just in the US. And we were actually shocked with the number of applications that we got. We had no idea that there were that many female founders in the enterprise out there. And the interest was so overwhelming. And when we evaluated these companies and ultimately picked the winners of the competition, I mean, the quality bar was so high. But where were these founders? Right?
Correct me if I'm wrong again, but based on what I've researched, the first company that you at Touring Capital invested in, you and your co-founders, was Pixis, which had a female founder, right?
Correct.
So was that a conscious decision? And we were talking about it a short while ago, or did it just kind of happen organically?
Yeah, it's a good question. So Vishali, who's one of the co-founders of Pixis, is a force to be reckoned with. She's incredibly technical, and she's so articulate and poised, in addition to just being deeply technical and being the product sort of mastermind over there. But if I were being honest, one of the main reasons why we chose to make that investment is because we had invested in it from our prior firm, and we knew the team, we knew the market pain point that they were solving for. And so we decided to double down for that reason. And it just was it was wonderful that Roshali was a part of that team, and she was a core part of the thesis. But of course, the first and foremost thing was the things that Roshali has built and driven that drove the investment.
So it was the value in the product and what she
Exactly.
brought to the table, and then diversity obviously came along with it, right?
Exactly.
Terrific. Okay, so I want to quickly, first of all, move into understanding your worldview, Priya. You traveled to 12 countries before you turned 12. I'm sure that kind of, in certain ways, shapes your lens in terms of how you make your investing decisions.
Yep.
Talk to me a little bit about how that kind of shapes your thought process in terms of evaluating founders, their ambition, their tenacity, and just the belief in their product.
Yeah, no, it's a great question. I do actually think that fundamentally shaped me for the better or worse,
Yeah.
but it did have a massive impact. So, for context, I moved to several different countries, 12 different countries before I turned 12. And so in some places we would live for, call it 3, 4, 5 months. In some places we lived for 2 years. So it varied across the board. And as a kid, to start attending school in a different geography, learning a different language, and then moving to another place and then starting over and needing to form friends and make friends quickly in new places
Must have been hard.
It was
super hard.
It was definitely very challenging. I mean, looking back, I'm so thankful for the experience,
Right.
but at the moment, I hated it.
Yeah.
Every time we would move, I'd have to befriend an entirely new set of folks and with different cultural differences,
Absolutely. Yeah.
languages, etc. Right. And so what that did is it built this sort of tenacity and resilience, almost this resilience of we can adapt and we can pivot and we can sort of grow, and also we can appreciate the differences among different cultures, among different folks with different backgrounds, and find commonality and common ground. That was sort of how I was raised, and because I had to do that. It was either that or I have no friends.
Right. Absolutely.
And so that actually came in very handy in sort of my own investor framework for what I look for in founders, but also to the entire, it's sort of equivalent, or it's an interesting analogy to the startup ecosystem, because as a founder, in general, you have to be open to the unknown. In fact, as you're building a company, you're going to have multiple lives
Sure.
across the board. You're going to have all kinds of pivot. There's almost no journey. Even the most successful companies over time, it doesn't grow like this. It grows like sort of this. There's zigzags, right?
It is very interesting you say that, and again, not to interrupt your
Yeah, no,
your
go
flow
for
of
it.
thought, but I was sitting here in the same studio with Sandy Gupta, who's a co-founder of Innovator, and he said it in as many words that it's the Brownian motion, right? The zigzag motion, which eventually leads to success. But you got to fail like 1,000 times before you get there.
You really do, right? And it's fascinating because, the way humans are equipped is we love it when we're in the up part of the zigzag,
Linear
right?
scale, yeah,
we
absolutely, yeah.
thrive and we drive off of that. But when you're in the lows and the ultimate lows, and as a founder, you've put all your eggs in one basket. As a VC, we get to take a portfolio approach, right? So if there's a company that's not doing well, there's 2 that's doing well to make up for it. But as a founder, you have all your eggs in one basket, and there are multiple times in any company's life where a founder is staring at potentially running out of cash, potentially macro environment has turned, they have to pivot, their customers no longer want the same things. So how do you deal with that type of adversity? And the resilience, the adaptability, it's actually relatively similar to what I grew up with. And on top of that, there's also this sense of you're always reinventing yourself. I had to reinvent myself in sort of every school that I transitioned to. So you're reinventing yourself for every stage of the company. What got you from $1 million of ARR to 10 million is not going to get you from 10 to 50. It's not going to get you from 50 to 100. You're going to have to evolve across each stage. And so that's also highly relevant. And then lastly, I think I just have such a deeply profound amount of respect for founders, because this is the hardest job.
It has to be, yeah.
It's so hard. It's so lonely to, sure, you have your co-founders, but you're sort of doing this thing, and you've willingly chosen to let go of stability
Absolutely.
and go after something that's so uncertain. And when you look at the rate of success for startups, failure is so much more common than success, right? And so you have chosen to actively, for whatever your North Star is, go and pursue this, put all your eggs in one basket, let go of a large company type of a job. So that is just so admirable across the board.
So you've spoken about a few things, and I just want to summarize because I'm sure there are lots of prospective budding founders listening in as well, and who are going to be watching it. So you've spoken about just the appetite to deal with failures,
Yes.
right? And having a big appetite for that.
Yes.
Having the comfort, with failing. You've spoken about resilience. When you get hit, you should be able to kind of pick yourself up and dust yourself off. So that is critical. Adaptability is another big one. As you scale international borders and move into newer markets, are you able to evolve and adapt? Terrific, wonderful. Just one out of curiosity. So when you were growing up, did you grow up with this risk appetite? And you were at SoftBank to say bye there and start with your own fund.
Yeah.
It requires incredible courage.
Yeah. This is an interesting topic because if I'm being candid, I was not raised with a large degree of risk appetite. So I grew up in sort of your classic middle class Tamil family. And so my parents are immigrants and we immigrated to the US. And so there's always this concept of stability.
Sure.
And also, it was always instilled in me that you always have to be independent. You always have to make sure that you never have to think about financial means, and so stability, and make sure let's have this predictable job that you can have for the rest of your life. My dad's actually, for context, he's had the same employer for most of my existence,
and that's how he moved.
That's actually how he moved around. Exactly,
15 countries.
Exactly, and so that's sort of the mindset.
Right.
And my family, we would have great business discussions at the dinner table. So I'm very thankful for that. But it wasn't a very risk forward sort of dinner table.
You got to hedge your risk. So you've gone on the other side of the spectrum to have this insatiable risk appetite.
Exactly, right? So that's why I've always been sort of fascinated by founders and entrepreneurship, because it almost didn't click for me how a founder could take on so much risk when they have the stable option. It's right there. And so that fascination and that intrigue, especially earlier in my career, was incredible to witness. And I will say Square was one of the roles that I had, which I was part of a very small 2-person corp dev and strategy team there. But being part of Square and seeing Jack Dorsey and the leadership team and what they were doing, and even during my time at Square, it was well before they had IPO'd to after they had IPO'd, and getting to see the company building in that journey. And at each point, all the different risk factors and everything, it just sort of crystallized, wow, taking the risk is so much more than just the monetary component associated with it, the financial stability component. It is you're building something entirely new that didn't exist before. At Square, small merchants weren't able to accept payments before. A flower shop in the corner or a coffee shop that just got started. And Square entirely changed and democratized the ability for transactions to happen at scale in the US and now global, right? And so the ability to create something that didn't exist before, the ability to fundamentally reshape an industry, and you are having such economic impact on other people's lives in such a material way. That is so exciting, and so much more exciting than, the 9 to 5. I mean, 9 to 5 really doesn't exist anymore in large companies as well. Let's be real.
Yeah.
But that's stable. I'm part of the cogs. And so over time, by investing in founders across these larger platforms that I was with before, and being on their boards and being exposed to company building at its finest, it had me bit by the startup bug.
So let me ask you this. I mean, it's very interesting you talk about Square and your interactions with Jack and how that probably shaped you in certain ways as a professional. Does that experience make you who you are as a professional today in terms of what your DNA is, what your thought process is regarding meritocracy and risk appetite?
Absolutely. Actually, Square, it's interesting because while at this point it was over 10 years ago in my career, but it was such a pivotal part of my career and shaping me from an individual contributor to thinking like a leader.
Mhm.
And so that transformation for me personally happened at Square. And what was fascinating is the way Jack ran Square was actually quite different from companies at that time. Now it's much more commonplace, but at the time it wasn't as commonplace. He didn't care sort of how many years of experience you had or what your prior background was. To some degrees, he really could not care less where you went to college or what your background was. He cared about what problems are you able to solve? How are you able to grow and scale yourself within the business? And he didn't believe in a finite job that you get to have. Like you can wear multiple hats and you can be leveraged in different ways. And the more you drive results, the more you'll get promoted and the more responsibility you'll be given. So Square was, I want to say, the ultimate meritocracy across the board, at least in the early days when I was there. And to me, who I think at that time I was in my mid 20s, was the most exciting thing because it gave me ample opportunity to grow across the board. I got to see different people wearing different hats and growing across multiple roles, and versus just doing one particular role, growing in your lane over time. So that in itself was riskier, but
Right.
so much more reward for
No
someone
wonder,
who's
no wonder
ambitious.
it kind of gave you the confidence that Forbes 30 under 30 was possible, right? It was
Yeah.
within the realms of possibility.
Yeah.
So,
Prior to that, I was in banking before and I was one of the only women analyst on my team at the time. And so I'd also not seen a lot of female MDs in teams. I'd not seen, because sometimes in order to dream big and aim high and be ambitious, you sort of need to see what's possible and be inspired by folks who've been there, done that. And there wasn't that much inspiration for me in the banking world. However, at Square, when I came on board, there was inspiration across the
everywhere.
board.
Yeah.
It was incredible. I mean, the C-suite at the time was 50-50 split between women and men, first of all. And your more traditional roles where you would say HR, marketing, which tended to be more female
Right.
dominated, were actually male driven at Square. And our CFO was female, our CTO was female. So it was actually pretty incredible at the time to get to see those powerful voices. And also these female executives had entirely different styles. So it wasn't like a one size, I had to mold myself to be something that I wasn't. You just had to lean into who you are. It gave me the power and strength to feel comfortable in my own skin
Right.
and leaning into what my strengths are and doubling down on them. Another thing that this just brought up is feedback that I was given by the CFO of Square. She's now the CFO of OpenAI, Sarah Fryer. She's incredible. So she's a mentor. And she said, you're given in a performance review, you're given your core strengths and your core weaknesses, right? And there's this whole mindset of, a studious Indian kid, you want to focus on improving your weaknesses to drive it to your strengths, right? But what if you just doubled down and tripled down on your strengths,
Strengths. Yeah.
leaned into it so much more, and use that to guide you versus working on consistently what you're not good at, right? And so that was also a reframing of, okay, I know these are the 5 things I'm good at. I'm going to triple down and focus there.
It's interesting you're speaking about, lessons learned during your operator days, right?
Yeah.
Operator and investor days. Why don't you talk about a painful lesson, a painful
Mhm.
early career lesson that you learned that, again, in certain ways has shaped how you make your investing decisions? I mean, what you've spoken about is what really helped you move forward in your career, right? But I want to talk about a painful lesson that you learned.
Yeah. I mean, so painful lesson learned is always from investments, I would
Right.
say, because and also painful lesson learned in the sense that, to be an investor, and this is actually my current partner, Nagraj at Turing, who's also a lifelong mentor of mine. At this point, we've worked together for a decade. But Nagraj has always told me there's no way that you can be a great investor without seeing failure. There's literally no Midas list investor out
Right.
there. For every 10 successful deals that you've had 30 unsuccessful deals that you've learned from, right? So because me as a I would say I'm a recovering perfectionist. And so,
That's a nice term. I've never heard that before.
yeah, exactly. So as a perfectionist, I was always extra judicious, especially for my first couple of deals at M12 on, oh my gosh, every single thing that could go wrong during the diligence process. Oh my gosh, here are the 10 risks associated with this deal. I don't know. I see the investment thesis, but should we do this or not? And I think the reframing from Nagraj was, okay, but the most you can lose in a deal is 1x. Right? 1x the money that you put in. But what you could gain out of the deal if it does end up doing well is a potential fund returner, right? So maybe reframe the mind to not consistently think of downside protection.
But the upside.
But the upside, right? Like be a little bit more of a visionary. Let me challenge you to just think, what if things went right? How could this end up, right? Yeah. And now obviously you can't invest in every company and fall in love with every sort of investment thesis, but that reframing of not looking at downside protection. And I mean, of course, we do look at downside protection and you do quantify the risks, but then also quantifying what the upside really looks like and how large and how disruptive this particular company could be actually helped quite a bit. So I want to say in the first cohort of investments that I did, there was definitely a company that actually had an early exit. So it was nice in terms of an early exit, but it wasn't like a 5x, a 10x type of an exit. It was a 1.6x exit. And so a little bit over the capital invested. And to be honest, I learned so much from that company across the board. Some of the interesting challenges that they faced, and a key lesson learned here, and I can go into lessons learned for an entire separate topic one day, but key lesson learned here, they had a wonderful, fundamental, technically defensible and very hard to build product that they had built. They were going after a sector, however, that was very slow to adopt. There was no sort of why now catalyst on why they needed to actually change the way that they were doing things. They were used to doing things on pen and paper. They had no real why now catalyst to change. And it was in the manufacturing sector that they were selling into at the time, which was incredibly large sales cycles. And when there's no propensity to pay for a solution like this, it's a nice to have, not
Absolutely.
a must have, right? And so the lesson learned was it was such a complex technology that till today, I will say, is one of the best, most technical teams, but it just wasn't necessarily as much of a go-to-market fit with the end market that they chose. In fact, the vertical chosen, had it have been a different vertical with a propensity to pay with that same technology that they'd built, it could have been a different story, right? So that then made me so much more thoughtful as I diligenced go-to-market strategies, approaches, and whether an industry is a little bit too early sometimes to be disrupted versus not, right? So that was a huge lesson learned.
And at this point, I think based on what you've just said, I'm just very curious to know, that every good investor, every great investor has something that they believe in. They have their conviction, right? Yeah. Even when everybody around them is saying, no, they disagree. You stand by your conviction.
Yeah.
Talk to me about, what is that one thing in enterprise software, in AI-backed SaaS startups that you believe in, that your peers and other investors underestimate and don't agree with?
That's an interesting one, because venture, while we all like saying that we're contrarian, we do non-consensus bets, right? And we find things that others don't. The reality is also venture is a little bit of a herd mentality associated with it. So
everybody's going towards something, you've got to join the party as well.
Exactly, right? Back in the day it was crypto, then it became AI. Within AI, it used to be rappers until we discovered they were rappers. Yes. And then it was no, right? And then it was the vibe coding companies, and then it's
everybody's talking now about compute, right?
Exactly, right? There's a new flavor of, call it flavor of the month, right?
Yes.
So it is important, and as a North Star, it's very important to convince ourselves to not want to be sheep. Only sheep have FOMO, right? To not have FOMO and be comfortable a little bit more in not following the herd, and sometimes that means having a little bit of panic that, oh, I'm not making investments in the areas that others are investing in.
Right.
I'm actually totally going after something vastly different. And this one I have to credit another one of my mentors over time, Rajiv Batra from Mayfield. He is an incredible SaaS investor, and he's picked a lot of great SaaS winners over time. I jokingly call him the understated godfather of SaaS.
Yeah.
But he is so good at taking his time with building thesis and conviction on a particular sector. Sometimes it could be 18 months of not investing and then going so deep in a particular sector and then realizing, okay, I have this aha moment. This is the investment I'm going to
But
make.
it could be very nerve-wracking, right? There's a strong buzz.
Yes.
Everybody is going after a certain category.
Yes.
And then you're just sitting tight, not making investments.
Absolutely, right? In fact, practicing restraint is actually harder than just deploying capital to some degrees, right? Because if you think about it, there's also, if the way funds work is there's a certain investment time horizon.
Sure.
You need to deploy the capital during that time.
Yes.
There's a little bit of pressure from a deployment perspective, but that shouldn't come at the expense of deploying and just following the pack
Right.
and following the herd, right? And so you want to see whether multiples rationalize. You want to see, okay, sure. I feel like anytime there's a platform shift as fundamental as AI, back in the day it was cloud, before that it was mobile, but with such a almost tectonic platform shift that's happening, there's almost a first wave that might be better to sit out a little bit, see where things shake out. Yeah. And then be thoughtful about where the dice has landed and where exactly the large platforms like an OpenAI, Anthropic are going to disrupt and innovate, and where are there pockets of innovation across the board where it's defensible, not just by tech, because technology as a moat is fundamentally diminishing in this world.
I read about that.
Yes.
Yeah, yes.
Right?
Yeah.
I fundamentally believe that technology as a moat is diminishing. And so with that diminishing returns from a tech perspective, and we've always talked about moats, defensibility, and how do you build that? Well, tech moat used to be the biggest thing. Now that's eroding, and it's going to continue eroding going forward because fundamental AI technology is becoming so mass spread now, and consumerized almost, if you will. So what are other modes of defensibility that we can build? Go-to-market defensibility? Is it network effects? Is it distribution, et cetera? Product itself as a moat? Virality that's inbuilt? So all of that.
Yeah. Absolutely. So, you spoke about that discipline, that restraint, right, which is super important.
Yeah.
Is that what you practice in touring capital in general practices when it comes to these hot rounds and, you have this inclination and this, everybody is just slipping in the term sheets? Is that when you say, no, I'm going to sit tight and see how it plays out?
Yes, absolutely. And it takes a lot of discipline. I will be lying if I didn't say at some point I will have FOMO,
right?
But I won't let FOMO influence my decision making.
Sure.
If that makes sense. And for us, core to our thesis at Touring is our product market fit is we resonate with founders who are incredibly capital efficient.
Uh-huh.
And so in the world of AI, theoretically, you should be able to build as much as you were able to before with a lot less people.
Right.
And a lot less resources because you're AI-ifying your own tech stack, right? Yeah. And so operating margin is going to be so much more important than perhaps gross margin, right? Yeah. And so the company formation is quite different. And so we resonate with founders that realize that and that don't want to raise copious amounts of capital and solve for short-term optimization on valuation by raising that amount of dilutive capital, because valuation doesn't actually mean money in pocket.
Absolutely.
Right?
Yeah.
Until there's a moment of exit. Valuation is but a point in time that's market driven.
Right. So the focus is on capital efficiency, not growth at all cost.
Yeah,
right?
exactly.
Okay.
Incredibly capital efficient. And what that does, actually, I'll give you an example. One of the companies that we had invested in the past, Zoom. So Zoom, at the time of IPO, the founder of Zoom owned 22% of the company. which is pretty incredible,
It is,
right?
yeah.
And that's only because he was incredibly capital efficient, raised only the amount of capital that he needed at each point and each stage of company building, right?
Right.
And so nowadays you see at time of exit founders who are diluted to 5% or less than 5%, right? And so the reason Eric Wan from Zoom was able to do 22% is he was very thoughtful about building the company, right? So actually for founders, what we're saying is, raise the amount of capital that you want to raise. Don't raise more than you need. Build the company with thoughtful milestones and own more of your company over time.
Absolutely. So, what you're saying is that the advice from Touring Capital is don't go after these larger rounds just because it's a statement that you've arrived as a company, as a founder.
Yes.
Right?
Yes.
Right.
Because it is a statement today. And if the market crashes tomorrow, it was just a statement. It has generated returns for no one across the table.
So what's your take, Priya? What are some of these categories in enterprise software and AI-powered SaaS that you see are overcrowded, right? Where there's a lot of funding, and why do you see, there is a tangible gap between the hype vis-a-vis what is the reality on the ground?
That is interesting. So there's a lot of funding that's happening at the fundamental infrastructure layer. So if I were to just overall segment the landscape, you've got hardware at the bottom of the stack. Then you've got infrastructure layer, which is the foundation models, as well as tooling that sits on top of foundation models, right?
Yes.
And then you've got the application layer, which is the horizontal business applications, as well as the vertical specific apps, which is software for car dealerships, software for financial institutions, et cetera, right? So we play pretty much on the top layer of the stack, the application layer, more so than we do on the hardware layer. We selectively play in the infrastructure layer, but not as much on the foundation model layer, right? A lot of capital has gone into the infrastructure and foundation model layer. And I think there's going to be a great amount of returns that come out of that. However, if we look at how exits are created, they're usually created via two paths, predominantly IPOs or M&A, right? And if you look at the entry valuations that a lot of these infrastructure companies are commanding, a lot of times it's like north of $1 billion.
Yes.
And even at the Series B, Series C stage, it's $750 million. I'm seeing valuations well north of $500 million, right? So in order to generate return on capital, at least 5x return, you need to envision exits that are huge, right? So large cap M&As, I classify large cap M&A as $1 billion plus M&A, or your $10 billion IPOs, right? If you look at the IPO markets and what's been happening over the last couple of years, they have not been great.
Absolutely.
Right?
Yes.
And on top of that, we have a few IPOs here and there that are good, but they've not by any means opened up. And if you look at pre-pandemic, what the bar was to have a successful tech IPO and what the bar is now, the multiples have significantly contracted. The expectations out of revenue has significantly increased. The expectations out of operating margin, et cetera, has significantly increased. And so you're just getting less bang for your buck by IPOing today than you would have 5+ years ago.
And you've just summed up what you mentioned on that post, and I saw that a couple of weeks ago. I think when you spoke at the AGM and you outlined 3 key, shall I say, cornerstones of your strategy, right? That entering at the right price point is super important because that's where you can actually show tangible returns to your investors.
Yes.
Then there was another concept about flywheels, compounding flywheels. Talk to me a little bit about that. I mean, I was trying to get my head around it, that you have success in one, and that kind of replicates and compounds success in other areas. Is that what it means?
So it's interesting. So we invest in AI technology, right? But the defensibility within that AI software technology actually stems from having some form of proprietary data, proprietary access to data. And it also stems from having some sort of a unique product virality, et cetera. So I'll give you an example on the data set. We have a company called Safely You in the portfolio. They do fall detection and prevention adoption at assisted living facilities.
Right.
And so they have amassed a incredible data set that is able to predict falls and detect falls very well, and that they've amassed over time. Every time they add to that data set and that data set continues growing, the outcomes that they're solving for with their product get significantly better, right? And so the fall detection continues to enhance. As that continues to enhance and the ROI from that is significant, there's more assisted living facilities that want to start using the product.
Sure.
As more assisted living facilities start using the product, they contribute their data into this data set, right? So it's this virtuous flywheel loop of now you actually have a data moat that keeps making the product better and better over time.
Love it. Yeah,
right? And at scale, imagine how powerful this is.
And did I read right that you've got 12 companies that Touring Capital has invested in? There's another fintech firm that thrives on the data piece, right?
Absolutely. So Delupa.
There you go.
Yes, exactly. So this is a company that's based in New York and one of my favorite portfolio companies as well. I'm biased, but they are also really interesting because they are able to review structured and unstructured data from earnings calls from any sort of release that comes through from public company data across the world, and they're able to extract it, look at accounting policies, and extract operational data and operational metrics within seconds of a company announcing its earnings. They're able to populate that in the hands of hedge fund analysts, equity research arms of large investment banks. So that's actually pretty powerful. And as that data set has continued to grow, the value that they're able to deliver to their end customer is just unparalleled.
Right. Now, before we start talking about how closely you work with founders and more than capital and writing the big, checks, how is it that you support them? I want to talk about the portfolio of Touring Capital. And based on what I saw was it's pretty diversified. So you've got a couple of ad tech companies.
Yes.
Pixis is one of them.
Yeah.
You've got investment in this health tech firm, for assisted living.
Yep.
You've got an auto tech company, auto tech SaaS, which is a vertical SaaS.
Yeah. Numa. That's right.
Numa. You've got a sustainability, firm which does carbon footprint or whatever, some cool stuff.
Yeah.
So it's a pretty diversified footprint. Is that conscious, Priya, that you're identifying certain categories where you see that kind of return coming in downstream? Talk to me about the thought process in terms of how you pick your investments.
No, it's a very good question. What you're seeing is a lot more focus on vertical applications of AI and very diverse verticals that we're going after and picking. So the interesting thing is we look for sort of similar dynamics, but across different verticals. So we look for a large TAM,
right,
a massive customer pain point. So we go after founders who are solving real world problems for real customers, right? So a massive pain point, another lesson from the lesson learned in the past, a strong why now momentum. Maybe there's regulation in play. Maybe there's a fundamental shift that's happening where people fundamentally want to start paying for a solution like this. What is the biggest pain point that they have? So we look for all these similar dynamics across all these verticals. But we love investing in a variety of different verticals. The other thing they have in common is typically they're more, I would say, indispensable industries versus your tech forward industries. So they're industries who are sort of living in not just the last decade of SaaS solutions, but the prior decade of SaaS solutions. And they're, in a lot of cases, they're still on-prem, or they're at least hybrid on-prem cloud. They haven't even fully done the digital transformation to cloud. But now they're caught on their back foot in the AI era. And in that particular sector, if one of their competitors starts implementing AI technology across the board, they're leapfrogging in terms of the operational efficiencies that come out of it. And you are the one person that's caught on your back foot. Now it's a imperative for you to stay competitive and be in business and remain competitive in business for you to actually start adopting AI technology, right? So we look for verticals that are ripe for that. And that's why you're seeing car dealerships, you're seeing assisted living facilities, you're seeing hedge funds, financial institutions.
That is very, very interesting. And in fact, I think you've already answered a question that I was going to pose to you, that, your advice to founders, SaaS and AI founders, who are like, do you identify certain pockets and certain categories where founders and companies are more vulnerable to the tectonic shifts that we are seeing around us? And I think you kind of alluded to that, Now, I just have, another question for you, Priya. So you meet thousands of founders on a regular basis, right? How do you decide, uh, when you only have 30 minutes for a pitch, how do you decide that a team or a market deserves, greater diligence? What is your mental model for that?
Regardless of which stage you invest in, and I've invested at a couple of different
Sure.
stages before, right?
But right now you do more Series B, Series C,
Correct,
up to
correct.
$3 billion
Yes,
in
I would
ARR.
say early
Okay.
growth is
Yeah.
is our core focus. And I would say the number one thing that we look for is obviously team and founding team in particular, and the founding team's ability to scale and grow. So some of the tenets that we look for is that adaptability that I mentioned, that resilience, but also this sort of intellectual curiosity and voracious need to learn and upskill and better yourself, and also the humility to know that you don't know everything and you want to surround yourself by experts. So that is actually quite fascinating because it's not that hard to decipher during the diligence process a founder who thinks they're a know-it-all, or a founder who is consistently up-leveling themselves, surrounding themselves by other folks who honestly know more than them.
Right.
Right.
Yeah.
We love that intellectually curious, voracious learner type of founder.
So again, if you have to summarize this, that we're talking about repeatable patterns that you see in founders and
Yeah.
founding teams, uh, teams that are able to scale up to $50 million in ARR. What would those top 3 or 4 things be? What would those top 3 or 4 tenets be?
Good question. So definitely I would say that intellectual curiosity. I would also say the ability to focus pretty maniacally, because there's so much noise and so much signal that comes in on a daily basis. And
Right.
sometimes, as I mentioned before, being a founder can be such a solo journey, and
Absolutely. You can be very, very lonely.
Exactly. It can be incredibly lonely, right? But the ability to maniacally focus on the end result, on the end product, on the end pain point that you're trying to solve. So that focus. I would also say that resilience, adaptability, and tenacity.
Sure.
So usually what we look for is at our stage, there's not that much evidence of tenacity within this particular iteration of company building, right? So we look at what else you've done in your career, what else you've done in your life, where there's evidence of potential resilience, tenacity, adaptability, the ability to pivot,
Sure.
right? Because if you're very strong-headed and too strong-minded, and the market sort of changes in front of you and you're not able to sort of handle that change that's being thrown your way, that's not a great sign.
So ability to maneuver in real time, course
Yes.
correct, and
Yes.
make moves on the fly.
Yes,
Okay,
yes,
terrific.
exactly. And ultimately, this one's, I think, underrated but so important. What is your North Star? What is driving you to wake up every day and think, I'm going to crush it with this startup and I'm going to do XYZ? What is that North Star? Are you mission driven? Is it something bigger than the purpose of, oh, I need to generate XYZ in revenue in
Right.
the next year, right? If it's very short term goal oriented like that, it excites us less, versus if it's something so fundamental and so profound that influences you and drives your everyday, that's unbeatable.
So another advice, to the founders that I would like you to give.
Yeah.
So what beyond the size of the check should they look for? Like what should they try and optimize for when they're trying to pick an, investor and a partner?
Right. It's a great question. So I always tell founders, we as VCs diligence you and we diligence your startup. You have to diligence us just as hard
Works
as we
both ways,
diligence
yeah.
you, right?
Absolutely.
Because this is a marriage. And as you know, the stat, it's kind of a scary stat, but most board member founder relationships last longer than the average marriage in the US. And so,
That
it's
is
actually a
scary.
very scary,
Very scary.
very scary stat. So if you think about that, this board member, the firm that's invested in you as well, is going to be tied to your success or failure of your startup and your journey with this startup building for a decade plus, especially at the early growth stage, right? And so you have to diligence the VCs. So what do you diligence the VCs on? I always say go for off-book references versus just the on-book references. So you can talk to other founders to understand how the VC has added value, what they've done, what they've been like over time. But in particular, the question to ask is, what did they do when you've had 2 quarters of misses?
Sure.
Right? What did they do when you maybe came close to running out of cash? What did they do during these pivotal company changing moments? And how are they there for you? What was the advice like? And, decipher and diligence a little bit further. And so that I also selfishly do that to our founders because we have an incredible founder network. We have 30 of our former founders who have invested in touring actually as LPs. And so we love opening up our founder network to net new founders every time. But it's just so important to see how the VCs were during the inevitable zigzags.
Right. And again, just an extension to what you said, as companies raise more funds and they go through subsequent rounds and the board composition changes, the governance, changes.
Yeah.
How do you still continue to shape, the vision, the thought process of your founders, and how do you still continue to influence, their people, their culture, their talent strategy? Just curious.
Right. You're right, because you hit on a good point that board dynamic is at a point in time, right? With each round that you raise, you add someone new, a new firm with new incentives as well, right? And ideally new expertise and new value that they can add to the table. So I think this goes back to one of my earlier points. Know what your core strengths are as an individual and as a firm. Right. And leverage that both as an individual, as a firm, to effectuate value at each point in time as the company grows. Again, when a company is 0 to 10, they care about slightly different things than they do from 10 to 50 of revenue, and then the 100 plus revenue. Right. So at each place, the value that we drive to founders is actually slightly different. So in the earlier stages, it might be interviewing core executive members that they're looking to hire, et cetera. In the next stage, it could totally be how to evolve your pricing packaging strategy, how to think through channel partnerships and scaling. And then the last stage could actually be a lot of fundraising support as you're thinking about raising your later stage rounds, as you're thinking about potentially even going public one day, support there, right? So the support sort of is customized. And I think if you just do one thing, it doesn't quite scale very well, but see what the founder wants and customize it.
And do you think, a good VC who's intimately involved in the operations, who's not just sitting on the outer periphery, is able to identify signals much quicker before things blow up, right? And what's your take on that? I'm just curious to know that, when things do go south, what have you seen generally for the kind of companies you invest in? Is it more to do with something going wrong with, the strategy, with execution, or with talent per se?
Yeah, no, good question. I feel like everything ultimately boils down to talent. And so,
and we're a talent company, and talent is front and center of any and every conversation we have.
It absolutely is, right? At each stage, also the type of talent that you're hiring, the type of talent that you need to retain, that age-old saying of hire slow, fire fast, it becomes quite important. Now it's actually in this world, it's almost like hire fast, but fire faster. So I think in the AI world. And so it usually comes down to talent, but in terms of scaling existing talent, up level, sometimes it comes to controversial conversations where the team that got you here now isn't necessarily the best team to scale from here.
Sure.
Or maybe they still are, but there's a level above them. They need to be slightly leveled. Those are tricky decisions and tricky conversations. And, founders, I find there's certain set of founders who might be very empathetic, and we love that. Obviously, you're empathetic because you're winning because you're empathetic with your customers, but sometimes empathy can go in the other direction, right?
Absolutely.
You're scared to do the tough decisions, right? So at that point, being a true counsel to founders is so key, and being able to just understand, look, I can put myself in your shoes. And the interesting part is, before I started touring, I would always say, I can put myself in your shoes, but now
you literally can.
I can. I actually, I'm wearing the
yes.
shoes now, so I understand how difficult hiring decisions are, right? And so I would say, at some point it boils down to some form of hiring, firing, growing, retaining talent, etc. And then of course those are the variables that are in your control from an execution standpoint, right? Then of course there's market. Markets always shift. And so that's where the adaptability and resilience comes in.
Great. Okay. And I think I probably heard it somewhere in one of the podcasts or one of the interviews you had given earlier, and it kind of resonated with me very strongly that at times, it's not, the onus is not on you to provide all the responses and, to be able to say, hey, this is the direction you should be moving in, but acting as a conduit and connecting them to other founders. And I think you spoke about having this cohort philosophy where you would put a certain number of founders who have identical problems in certain cohorts, and then trying to, find those answers. Do you do that, like, at Touring Capital?
Absolutely. As a VC, you are a board member. You can provide advice and whatnot. The advice is 10 times better when it comes from a founder who has been through exactly this issue in the past, or who's currently going through it, and you're brainstorming directly with them, understanding what worked for them, what didn't work for them. That's why our founder network, I keep coming back to it, is so powerful, because we connect our new founders with our founder LPs. We connect founders in our portfolio who are going through similar stage problems with one another as well. And so I think that network helps tremendously. And of course, we are there to help founders. We don't company build, right? We are not doing that. We are there to sort of ask the right questions to the founders to get them to unlock the vision that they actually have inherently within them, right?
It's almost like a therapist,
It
right?
is. It
that
actually
you have to
is.
find answers internally.
It is so much of a therapist type of a role, or
Right.
like a confidant, a sounding board. And the important way to be a true confidant or sounding board for someone is to build that trust. So if that trust doesn't exist, then a founder isn't going to want to come to you with their most vulnerable thoughts and vulnerable
100%.
questions, right? They're only going to tell you about what's going well, right? And that to me is not a great relationship. I want to know the insecurities and vulnerabilities. I want to be there to help them brainstorm through that, not just through, oh, we've closed yet another deal,
Couldn't agree more.
Exactly.
Absolutely. Terrific. Wonderful. So, I just want to do a quick rapid fire with you. And
Yeah.
again, based on what I've read about you, Priya, and based on what I've researched. So let me start with the first one. So when Jack Dorsey, I heard that, in his meetings, if he was really captivated by an idea, or if something deeply resonated with him, he would start stroking his beard. So that first time you spoke about Jack, I did this, and you're like, hey, what's wrong with this guy? But now, to put things in context, that's what I meant. So if, what is the analogy, right? So Jack stroking his beard, if, he's captivated by an idea, what would Priya do in a pitch, right? If something really struck a chord?
That's a great question.
I mean, this is a big one for founders who are going to be pitching to you, by the way.
Yeah, exactly. To be able to read me.
So we're going to let the cat out of the bag.
That's a great question. So I fortunately don't have a beard to pet.
Yes.
Yet, hopefully never. But I don't. But it's interesting. The type of I feel like I'm relatively transparent in my passion. So if I'm very interested in a pitch and I love the idea, you could tell that I'm so passionate about it. And I will start asking very specific questions about the customer, and I will put myself in the customer's shoes. I will start brainstorming with you live on what the vision could be, and we'll start mind melding on the vision and whatnot.
So the 30-minute meeting would go on for an hour and a half.
Exactly.
Probably, and
That's
you would know.
telltale sign when we run over and I'm late to my next meeting. But I actually love that, because then I get incredibly excited. I get fired up and chat with our team internally. And so you'll see the aha moment sort of coming together. I feel like founders know that, because the founders who've described me like that in the past, usually the ones that we've invested in, that it's sort of like a mind melding of where the founder sees the vision for the company and where I see the vision for the company. And so we meet in the middle. So it's sort of this aha moment on both sides.
So you don't have that stoic appearance that the person won't be able to tell what's happening. I mean, you kind of give it out. You
Right?
give out the signals. Okay, all
I
right.
unfortunately don't have a poker face.
Oh yeah. Some people you just can't tell. I mean, did you blow it up or did you just kind of ink it?
Right,
Okay,
right,
terrific.
exactly. But having said that, I am someone that will always be polite. And so I'm never going to, even if it's not a fit for us, I'm still not going to be dismissive or et cetera, because fundamentally, because I empathize so much, it is so hard. Just because I don't find it a fit, you could be building a wonderful company. There's so many companies that I might not think is a fit that go on to be incredibly successful, right? So that is probably something uniquely me.
Fascinating. Okay, all right. When you want something really bad, Priya, right? I mean, you really want a deal, right? That hot deal that everybody is pursuing. Or when a founder wants an investment, wants a VC. When
Yeah.
you want something really bad, how do you behave? How do you conduct yourself? What's the piece of advice there?
I will say I'm a fundamentally incredibly competitive person. So I'm driven by competition. I'm driven by sort of, I guess, who isn't driven by winning, right? But I'm driven by competition, I would say, perhaps more so than an average person.
So you would take a shot and do what it takes.
I will do whatever it takes.
Maybe stand up on your chair and wave at the way you did, at Berkeley. I heard about that.
Oh, that is so embarrassing, but very accurate. That is actually exactly what I would do. I would do what it takes and also just hustle. I have zero ego. And I have a lot of humility, and I will go out there and do what it takes to win something if I feel like I need to win it.
Okay.
Right.
So even if you have to put yourself in a position of vulnerability where you don't know how it's going to be received, you
Yeah.
don't know how it's going to play out,
Yeah.
but you still, you still take a stab at it.
Absolutely.
Fair enough.
Absolutely. And yes, the college thing is a great example of that.
Look, we know a little bit about you. Okay. So the last thing is that, with AI and, everybody talking compute and token utilization and everything, changing in the last 12 months, what is that one piece of advice for our leaders, right, in the AI enterprise software space? How do they need to upskill themselves, and how do they need to up their game to be relevant and, to be on top of things?
Yeah, it's a great question. And as you mentioned, everything's been changing in the last year. More importantly, everything is changing on a quarter by quarter basis now.
Right.
And so it's wild. The fundamental technology itself, then there's a go-to-market component, then there's the pricing, packaging, and how do you get the right product in the hands of the right folks and get them to continue using it and retain that end customer. And so I would say the biggest change and transformation that I'm seeing is in, honestly, how go-to-market is scaling and how pricing and packaging is scaling across the board. So being cognizant of whether it's consumption-based pricing, value-based pricing, traditional SaaS sort of being fundamentally disrupted, and also what is your product ultimately generating in terms of ROI and value? And then how can you get it in front of the right user and get them to actually not tinker with a bunch of different competitive solutions as part of an AI innovation budget? Because now there's a frenzy of apps out there, and there are these chief innovation officers at enterprises who are forced to try multiple solutions before deciding what to do. So do not, I guess, take short-term success as an indicator of long-term retained success,
Sure.
right? And so that need to consistently keep innovating and keep being top of mind is more important than it ever has been.
That is wonderful, interesting, fascinating, truly captivating. Forbes 30 under 30, shall I say, 50 10x deals under 50, Priya, is that what you're chasing? Or do we put a 2x multiplier? Maybe 100 10x deals under 50, is that?
I like that. Let's go with that.
Priya, thank you so much. It was such a pleasure having you on the show.
Thank you so much for having me.
If you're listening to us on Spotify, Amazon, or Apple, if you like the content and what we're talking about, please go and hit those 5 stars and leave us a review. That goes a long way. And if you're watching us on YouTube, then please like and subscribe. And that way you can be absolutely assured that our content reaches you and we follow you along, our journey. And we hope to bring to you more founders, more ecosystem builders to talk about their scale-up pursuits.
for flying with the Scale Up flight. We hope you'll join us again soon.